All right. Welcome and hello to, here we go. Lyndon's jumping in and Andrew shouldn't be far away if he's there. Lyndon, how are you?
I'm great, thanks, John. Very,
Yeah,
very good. Really
excellent.
looking forward to this session today.
Beautiful. Here's Andrew jumping in. Hey, Andrew.
Hi there, John. How you doing?
Yeah, great. Thanks. Great. Well, listen, welcome everyone to this great little presentation put together on behalf of myself, John Mailer from ProTrade United, Lyndon Russell from Next Level, Accountants and Dividers, and Andrew Hurst jumping in from the small software company called Xero, which I'm sure most people would have heard of as well. So we've got a jam-packed session today, and thanks Lyndon and Andrew for putting some time aside to support, the trade and construction industry. And really, the intention is of ways, we're all going to have a little conversation about 15 minutes each to how we can, look at ways to build profit in our organizations, harness the technology, and I want to have a chat about cash flow as well, and tying all of those three in together as well. We've got a great crew coming in from around Australia and New Zealand as well. So, guys, if this is your first time on one of these platforms, congratulations, welcome aboard. You'll see down the bottom a little chat box there, and the opportunity in the chat box as we're conversing today to type in and say, hey, listen, where are you from? What type of business that you've got. If you can see us, if you can hear us, fantastic. Type away in the chat box. The other thing about the chat box is throughout the session today, if you have any queries that you do have for us, we've got a bit of a Q&A time at the very end there as well. So we've got Dean there saying, hi, I'm online. Try to get my video, got audio, fantastic. Q&A at the end. So we want to make sure that the questions are general. We were having a little bit of a chuckle beforehand. If you've got any specific questions around Xero or industry or company structures or specific guidance and advice, we'll give you an opportunity to connect with these guys a little bit later at the very end. But if it's general and we can address it, it's going to benefit everybody, then we'd love to support you with that as well. But Lyndon, we might get things underway and handball to you to kick things off, yeah?
Yep, sounds good, John.
And go from there. So listen, Andrew and I are going to go into the sidelines and head over to Lyndon. So you're free to share your screen and get things underway.
Thanks, John. I'll just get my document open here. Let's give it a sec. Sorry, guys, just give me 1 second. We're almost there.
Beautiful.
Excellent. Cool. So, welcome, guys. My name is Lyndon Russell. I am the Director of Next Level Accountants. We specialise in high-performance accounting for trades and construction businesses only. I'm also #1 best-selling author of Know Your Numbers on Amazon. And you can get yourself a Kindle copy, paperback copy, or audio copy of the book on Amazon. So make sure you look that up.
Lyndon, you may
So,
just want to put the presenter view on down the bottom there, like we talked about before. It just sort of zooms up to bigger screen.
is that video, participants, chat, share, pause, annotate, remote control, show,
No,
webinar? Oh,
no,
presentation view. Yeah,
because
yeah, that's
that's
right.
that's the
Yeah.
one.
Thank you.
Perfect.
Excellent. Okay, so yeah, as I said, my book, Know Your Numbers, is tailored for trades and construction business owners. And what we do at Next Level Accountants is all about improving profits using a defined method called the CLEAR method, which stands for clean up, learn, enjoy, ambition, and reward out of your small business. So we're going to start with some statistics from the Australian government that was released in June 2023. The Small Business Family Ombudsman released a report called Small Business Matters, and they did a survey of businesses in Australia. And here's some of the statistics. 98% of all businesses in Australia are small businesses. So it's a huge number of businesses. 61% of small business owners with 1 to 19 employees work 39 hours a week or more. So, what that's really saying is small business owners are working hard. And 18%, or almost 1 in 5, of all small businesses in Australia are in the trades and construction sector. So it's an absolutely massive part of the small business communities is small businesses in trades and construction. Now, if we zoom in on the numbers, 43%, these statistics are pretty stark. 43% of small businesses fail to make a profit. So almost 1 in 2. And that number increases to 55% of small businesses fail to make a profit when they employ staff between 1 and 19 staff. So 55% failed to make a profit that employed 1 to 19 staff. So as your business gets more complex, also the finances become more challenging. And probably the biggest statistic of all is that 75% of all small business owners take home less than the average weekly wage, which is $1,838 a week. So what you can see here is that most small businesses are struggling financially and struggling financially. So what my section of the presentation is today is about how you can ensure to put your business in the thriving minority and to make sure that your business is more profitable. And the answer is, the question is, how can you make your business more profitable? And I'm hoping to answer that today with my expertise in this area. And the answer is, you must know your numbers. If you don't know your numbers, you don't know your business. Just bear with me a second, guys. So I've been Next Level Accountants was started in 2010. So we've been around for 15 years, but I've been an accountant for about 22 years. And I've seen it all when it comes to trades and construction business owners. And this is a demo company that we've got here on the right-hand side. And you can see there that the business has made a $9,516 loss. And this is quite typical of an accounting file or a zero file that we inherit when clients come on board. I mean, everything looks pretty well laid out, and to the untrained eye, you'd be looking at that profit and loss and just thinking, well, nothing's, that seems pretty clear to understand. I can see what sales is, I can see what my gross profit is, and I can see what my operating expenses were. So why did this business actually make a $9,516 loss? It's a really tough question to answer when you look at that profit and loss. Maybe it's a combination of factors. Was the revenue too low at $32,000? Was the materials expense too high at $4,000? If we have a look at office expenses, that totaled $1,410. Are they spending too much on office expenses? They spent $1,830 on advertising. So when you look at it, you actually can't understand, you don't really know where to look. It could be a combination of factors. And when your profit and loss is organized this way, you sort of look at it and go, well, look, I can't really make sense of where I'm losing money or why I'm not making the money I thought I would be in my business. And I was just sort of talking to John before about analogies, and we needed to get a fence, repaired at our house and a gate. And like, I'm an accountant and I'm good with numbers, but I'm not good with my hands. And although I probably could have put the gate up myself, it wouldn't be square, it wouldn't be level, it wouldn't shut properly. And it's no different when it comes to the finances of your business. When it comes to the finances of your business, a lot of trades and construction business owners make the mistake of doing it themselves. And they're doing it themselves to save a dollar. But actually, that dollar that you're saving is costing you more because you don't know where to look in your business to determine why you're not making the money that you should be. So the next slide that I've got shows you a different way to lay out your profit and loss. So that will allow you to sort of zoom in on the areas where you're not making the money. So when it comes to trades and construction business, you've really got to think of your business in terms of labor and materials. Most trades and construction businesses sell their time, dollars per hour, and they also sell materials required for the job. So what we've got here is the exact same business with that profit and loss, that demo company. But you can see a key difference there in the trading income. Instead of it just going into an account called sales, we're now tracking revenue for labor and revenue for materials. So we're splitting that out. Also, now when we're looking at cost of sales, in the previous screen, there was no cost of sales. So what we've done here is we've lifted wages and salaries for the tradesmen into being a cost of sale. And we've also lifted up the materials expenses. Material expense was previously an operating expense, but we've put that into cost of sales too. And now this profit and loss shows you that there's a gross profit in the business of $1,631. So the previous profit and loss didn't show that. It just showed that the business made a loss of 9,516. So by organizing your revenue and expenses into labor and materials and splitting it out accordingly, you can now actually determine what the issue is. And the issue, looking at that gross profit of $1,600, is the gross profit doesn't cover the operating expenses of $11,147. So all of a sudden, we're now in the driver's seat. We know where to look. Now, what was the profitability from labor? So the revenue from labor was 27,000. The labor expense was 26,000. So the business made a gross profit from labor of $631. So the gross profit margin on labor was 2.3%. If we look at materials, revenue for materials was 5,000. Materials expense was 4,000. So the business made a gross profit of $1,000 off materials. So it made a 20% gross profit margin on materials. So now we can clearly see the issue is with labor in the business, not materials, because the gross profit margin, 2.3%, isn't enough. So by organizing your zero file and your accounts in this way, this will allow you to focus your energy on the areas of your business where you are losing money. So when you know where to look, knowing where to look means that you can ask the right questions. If you get that report at the end of the quarter or end of the month, why did we make only a 2.3% gross profit margin? Am I charging enough for labor? What are the charge out rates for your team? Is it $80 an hour, $90 an hour? Or is it $110 an hour or more? And is that the right amount? When you factor in things like superannuation, work cover, public holidays, sick leave, annual leave, what was the true cost of that labor? And am I charging enough to cover that true cost of labor? Another question that you can now ask is, are all my labor hours being captured? Have we got the right software so that my team, when they're working on a client's job, can allocate their time to that job so we can ensure that we're capturing all the hours on that job? There's nothing worse than doing a job and not charging for all your labor. Another question is my team working efficiently? And are the guys standing around with the phone in their hand while they're on the tools and scrolling through Instagram? Are they back from smoko? Are they back from lunch at the allocated time? Are they turning up on time? Are they getting through the right amount of work in the day? So you can start to look at that. And probably a really big key area where businesses lose money, which they don't think about, is this concept called rework. How much is rework costing my business? The definition of rework is something that's got to be done a second time because it wasn't done correctly the first time. You've got to go back and fix something you didn't do correctly. And it's actually a real hidden cost, an unrepresented cost that people don't sort of think about. Because when there's rework, it's actually costing your business 3 times. The first time you did it, then you've got to go back and fix it. And when you're going back and fixing it, you're not working on another job. So there's 3 lots of costs worked into rework. So you can start to look at how much rework hours is costing your business. Another thing you can look at is, am I scheduling the jobs correctly to reduce non-productive time? You know, if we're finishing a job at 12 o'clock in this suburb, and then the guys have to drive 90 minutes to another suburb, which is downtime, could I be tighter with my scheduling and make sure that the jobs are sequenced in such a way to really minimize that downtime? Mhm. And the final one, which ProTrade and John always talk about, is, are my processes correct? Have I got the right processes to be able to deliver this work efficiently? Have I got checklists and a way of doing things that means that I can do the work in my business efficiently? The second bit I would like to talk about is how to never lose money on materials. A lot of businesses, business owners sort of feel like, or not necessarily feel, but they might not charge what they should for materials. And I believe that comes down to a mindset. As a business owner, you must treat clients' projects as theirs, not yours. You're creating value for your client. You're providing value for your client's project. So you've got to make a margin on materials. And always prioritize profitability on materials. It is a non-negotiable. You must make money on materials. Why do you charge a markup on materials? You charge a markup on materials because we want to leverage your knowledge. You know, the years that you've spent becoming the skilled tradesman that you are, and everything you know and have learned is your knowledge. And don't discount the value of that. What the materials are required to complete the job. You're also applying your expertise in accurately calculating quantities, making sure you're calculating the quantities correctly. And also you've got to account for inherent risks, including ordering errors, for example, ordering too much materials or ordering too little. Also, you've got to factor in things like perhaps a bit of wastage in terms of incorrectly cutting or measuring the materials. Also, you've got waste disposal. You know, if you've ordered excess materials, you've got the cost of disposing of that waste. And the one thing that you must remember, of all things, when the main reason why you're, including all those other reasons, that you're making a markup on your materials is that you bear the full financial risk. You're going to your suppliers and you're ordering materials on your account, which your business must pay for. So these are all the reasons why you can never lose money on materials. So I'll just quickly touch on the headlines here because I want to open up the floor for any questions in the last couple of minutes. So how to implement markup on materials. Step 1, determine your markup percentage. Generally speaking, it's between 15 and 25%, but in construction trades, it's generally about 20%. Build markups into all your quotes and estimates. Use quoting software, add buffers for price fluctuations. For example, a 10% contingency for waste. Make sure that you track and monitor your material expenses in Xero. Set up dedicated accounts for materials revenue and materials expenses to get the true calculation of your gross profit margin. Audit regularly, use back costing, use Xero dashboards to be able to spot trends and prevent losses. If you're not doing it already, just start small, test on a few jobs, and then scale to all projects consistently to ensure that your business is profitable on materials. So I believe once you've got those fundamentals right, your business is ready, set, go to take off and start making some money. The final offer here is a QR code. So if anyone's interested in a a 20-minute complimentary review session today, please scan the QR code. Our specialist will examine your Xero file, and the aim of that is to provide maximum value to you and deliver practical, actionable recommendations that you can implement immediately to get greater financial visibility in your business. So with that said, I will stop my screen share now and to see if we have any questions.
Fantastic. Thanks, Lyndon, and a great way to kick off this session. You know, when we're talking about, profitability, one of the things that's important for business owners to understand is they don't exist to be profitable. Businesses need to be profitable to exist. And that's really the key component there. And there's so many moving parts in a trading construction business, particularly in the levers that you can pull. And, I'm glad you spent a fair bit of time on that markup versus margin. I'll touch on it briefly, but I was having a conversation with a business owner last week, and he couldn't work out why when he marked up things 30%, he wasn't making a 30% margin.
Yeah.
And understanding the real difference between those two is absolutely key there. So listen, team, just have a think about if there's any queries you've got for Lyndon or for myself and Andrew as we come up, just to type them into the chat box there. Shelley's got, thank you, Lyndon. So many notes so far, which is a great kickoff as well. So I guess the flow of today from what Lyndon was chatting about is, first steps, we've got to talk about, profitability and some of those key levers, particularly around gross profit. Actually, let me just ask you this question, Lyndon. How many businesses, when you start working with them, inadvertently or not knowingly, put their on the tools labor as an operational cost versus as a cost of goods at the top there?
Look, yeah, my experience are typically businesses with less than 5 years being in business won't be putting their labor as a cost of sales. It'll just be buried as a business overhead. But as businesses grow and develop and understand the importance of that, they pretty soon realize that they need to do what I recommended there. So it's great that everyone's here today to be able to really take on board that key piece of information. You can really you don't need to make a mistake in this area. You can implement that almost immediately and get true visibility on what your gross profit margin is. But generally speaking, none of the bigger businesses with, say a $3+ million turnover and 10, 15 plus staff that have been around for a long time, you don't see those issues. But it's typically in the sort of newer businesses, less than 10 staff that have been around a bit of a shorter period of time.
Yeah, great. Thank you. Listen, we've got a quick query coming in here. I'm not quite sure what A Master Construction or who's running A Master Construction, but it says, I'm finding it, Kira, thanks, Kira. I'm finding it challenging to manage material tracking in construction. Unlike other industries, clients can easily visit places like Bunnings or Reece and see the retail pricing. So there's constant pressure to justify material costs and margins.
Well, I think you just got to go back to that mindset that I talked about. You as a skilled tradesman are bringing your expertise in knowing what you need to do and what materials are required to make the project go flawlessly for your customer. Sure, if the customer wants to do it themselves, go do it themselves. And maybe that's not the right customer for you, but you've got to be confident in articulating and communicating the value that you provide, and never be shy of marking things up. People don't expect things for free. And as I said, there's so many risks of your business buying the materials for that client that you bear. And that's actually why you need to be charging that markup for that value that you're providing.
Yeah, absolutely. And it's a great part that I'll just lead into now, particularly around how you position yourself within the marketplace as well. So keep those questions and comments coming, guys. We'll aim to get to them. I'll keep the content flowing as we go, but thank you, Lyndon, and I'll bring up my screen here. We got to talk cash flow now, because I know there was a comment there. Shivani was asking about cash flow management. So I'll address some key points here. But the first thing I want to talk about, particularly in this age of information, ignorance is a choice. So we either don't know or we're choosing not to know. Yeah, because if you want to get access to like profitability information through, your reporting access or creating cash flow forecasts in your business, it's all a choice. And that's what I want you to take on board here, guys, is that unless you're prepared to own the financial situation in your business, you're not going to be able to change it. Because you could easily say, well, it's the customer, or things are going up, week by week, costs are exploding, overheads are going through the roof. We're all probably facing a very similar situation. But unless you're prepared to own it and take full responsibility, then you're not going to be able to change things. So that's really the key that I want to sort of address with you here. And then you get to choose. Are you creating your business by design, consciously waking up each and every day saying, I'm in control of my destiny and the choices and the thinking, the actions, the decisions I'm making? Or am I sitting back and just allowing things to sort of unfold and react to what's showing up? Again, it's all a choice. But unfortunately, what happens in a lot of businesses, and particularly the trade and construction industry, there's, well, what's everyone else doing mentality? Well, maybe I'll just sort of find out what everybody else is doing. I'll be the average. I don't want to be too high. I don't want to be too low. But unfortunately, when we talk about, the mob mentality or the sheeple mentality, 1,000 people doing a silly thing doesn't make it less sillier. What's happening is you're just joining the mob. And Lyndon showed you the stats at the start of the session. So one of the things that I always say is, if you were to write down everything that you could put in place to ensure that your business goes broke, write all of those down and then do the opposite. Yeah. So that's a good thing to consider, and do what everybody else is not doing. So I'm going to talk about the 5 key things today around cash flow for you, because there's a big difference between having a profitable business and having cash flowing through a business. And that's really the key, because the cash is like the oxygen. When you want to think about it, you've got to be profitable first, but your cash is like the oxygen. And if you don't have that oxygen, we're not going to be able to breathe and progress. So let's look at the starting point. First and foremost, to ensure that cash is flowing in your business, you need to have some structures in place. And this is making sure that you've got the right invoicing, the terms and conditions, having a process in place to be able to collect the money. Yep. You want to make sure that you're getting larger deposits up front and more frequent progress payments along the way. If you're not getting as larger amount of deposit at the start as possible, now again, depending on what industry you're in, you might say, well, we're only supposed to be able to ask for a certain percentage, but there are ways around that. Yes, that might be to hold a job on the calendar, but when you order materials and have them arrive on site, there's another opportunity to get some progress payments along the way, making sure that you get full payment on completion as often as you possibly can. It doesn't mean you can't renegotiate terms and conditions depending on the customer or the type of business that you're working with. But again, all of these are up for grabs. Making sure that you've got separate bank accounts set up. You've got your main trading bank account. You've got one where you can push your profit first away so that you've got that in cash. Do you have a holding account where you put aside GST, your PAYG, your super, because technically that's not your money, so that when that is due, you've always got it? Possibly you've got one for your materials where you push that aside, or your subcontractors. So your ability to keep your money in separate buckets so that it's easily identifiable is one step. Rather than just having one bank account, which is like a mosh pit, a mosh pit of money coming in, money going out, no real order or design. And the next thing around is being responsible to be able to forecast as far in advance as possible what the bank account balance is going to be. Now, again, every business is different. You might have money coming in and out today. You might sign a job this morning. You might deliver it this afternoon, and you might have the money in the bank account this afternoon. If you're on a multi-million-dollar construction project, you're going to have to forecast in advance when you expect, progress to be complete, invoice to be given, money to hit the bank account. Everyone's a little bit differently, but these are some structures that are so important to have in place first and foremost. If you don't have these in place, well, then you're going to be guessing around where your cash is going to be. We work with a great company called Tradie Packs, and if you're wanting to professionalize the way that you are providing your invoicing, your quotations, your purchase orders, your statements, these are customizable with Xero. And, Andrew's with us from Xero today. He may be able to speak a little bit more to this, but one of the things is that, these guys from Tradie Packs can make sure that you get your invoicing, your professionalism, your, timeliness around your invoicing out and looking great at the same time. Secondly, number two, if you've got the structures in place, point number one, yeah, none of that will really work unless you're profitable. Yeah. To have cash flow, you actually need to be profitable. So one of the things that we recommend at Pro Trade United is that you aim for a 15% pre-tax profit after paying all of the salaries, including for yourself as business owners. Yeah. So making sure you're paying yourself a market wage for the role that you're delivering in the business, and then hitting 15%. So that's what we work with our clients on as a bare ass minimum. That's what our BAM is. 10% is relatively these days break even. You only need to put on, look at some of the decisions that we need to make as business owners. What happens if I put a new hire on? And depending on the role, how quickly they can get up to speed to be generating income and being profitable for the company. Maybe you have a client who has a delayed in payment for whatever reasons that are going on. And all of a sudden that's going to impact profit and cash. And what we're understanding at the moment is most businesses are one bad month away from having to shut the doors. Yeah. So got to have our structures in place first and foremost. Secondly, we've got to be profitable. Now, to be profitable, we've got to make sure that we're pricing effectively. Again, these things all impact our cash flow. So one of the things to keep in mind is that when you run different business models, like if you're doing service and maintenance on one side and you're also doing project construction work, you've got diversity in pricing methodology. Versus if you're only doing service and maintenance or you're only doing project construction, you then have certainty, I guess, around the structure of your pricing. So again, that mixed business model can dilute your, efficiency and effectiveness around pricing. Make sure you position yourself as a specialist versus a generalist. Yeah. When you position yourself in your marketing as someone who does certain things really well versus being all things to everyone, again, a different conversation, but again, something for you to think about. Make sure you price for gross margin, what you want to keep after paying all of your direct costs, not markup. And again, knowing the difference between the two is absolutely critical. Know the true cost to employ your team. Yeah, you may be paying someone $40 an hour, but what we know is the actual cost to the business is going to be between 1.3 and 1.4 times that, when you take into account all of their leave entitlements, inefficiencies, meeting times, breaks during the week, non-billable or non-chargeable time through the week. And then you've got a margin to put on top of that as well. Yeah. Make sure you review your pricing every 90 days and have someone external review your pricing. Yeah. Someone like Lyndon checking in, one of the team at Pro Trade United to have a look at an external viewpoint. Because when we're too close to it, we can be emotionally involved and we can come up with all the reasons in the book not to put our prices up. Yeah. And one of the things is around pricing, there's not one business owner that we've spoken with who, when they do put their prices up, have some certain uncertainty, some doubts, some fears, some concerns, yeah? But sometimes you've got to lean into that because that is the way. And here's an example. When we first started working with this client, they had 14 players on the tools, okay? They were turning over around about $1.2 million. They were not profitable. In fact, they'd made $1,670 pre-tax profit for the previous 12 months. Okay, that's a big risk to play. They hadn't increased their prices for 18 months. So we worked with them to progressively put their prices up over the next 90 days by 30%. They did not lose one client. They communicated it well. They communicated professionally. And in the next 12 months, they made $189,000 pre-tax profit. Okay, without having to do any extra work. Okay, if that's something that you'd be excited about, then let's have a conversation. Number 4, coming back to pricing. So number 1, have you got the structures in place? Number 2, are you profitable? If you're not profitable, then you've got to look at your pricing. Now, when it comes to your pricing, you've got to make sure that you actually value who you are. Now, here's a comment, something to consider. Someone has to be the most expensive. Yeah? Why not that be you? Again, someone in your industry has to be the most expensive. Now, I'm not saying be the most expensive and don't deliver the value. Be the most expensive so when people talk about you and your business, they go, you know what? Bob, he's got a great business. He's one of the most expensive, but he's the best. And you always get what you pay for with Bob. So one of those comments I want you to think about and lean into the uncomfortableness that may be there for you. When we're working with clients at Pro Trade United, it's all about having them in the top 20% of their pricing. Think about paying and charging for your outcome versus time. And remember, all of us, including our clients, are always greedy, lazy, impatient, and vain. Okay, so if that's the scenario, make sure that you give people more than they expect. Make it easy for them to buy from you. Give it to them quickly, not rushed, not hurried, and make people feel great in the process. And last but not least, if nothing's working here, I'm going to share with you what's actually going on for you. Okay, you haven't shifted your identity from being a tradie, from being a technician to being an industry leader. And the tradie chatter that can get in the way of you becoming an industry leader and keeping you stuck is doing what everybody else is doing. The belief that if it isn't working, I've just got to work harder. Get up earlier, stay later. I don't want to stand out. We live in this country, Australia, New Zealand, with a tall poppy syndrome. Stops us from shining. Yeah. I've never been good with numbers. So, that's my excuse. Business is a struggle. And you know what? It's also noble to struggle. Let's keep struggling. Let's talk about how hard it is. I'm not smart enough. And who am I to be wealthy and free? So some of these things I want you to consider. Are these some limiting beliefs that you may have that's holding you back from being that industry leader, charging what you're worth, having a consistent, profitable business, and having the cash flow to show up as well? So some of those things I'd love you to consider. Maybe comment in the chat box, and I'll have a look as Andrew's having a conversation. But what may be holding you back from getting the cash flowing in your business? Or if you have any queries or questions as well. So let me stop my share around that. And Lynn and I trust that sort of flowed on from your conversation as well. And and I know Shivani said share some cash flow management tips, and I trust that assisted you as well. I'll have a look at some of these queries and questions as we go. But Andrew, love to welcome you to keep the conversation flowing. And Andrew is one of our great partners from Xero, who's here to have a conversation around how we can use and harness our technology to also assist us with profitability and cash flow. So I'm going to handball to you now, Andrew, and I'll check the comments as we go and keep our Q&A flowing as well. Away you go.
Thanks very much. Just had to click back in so I could unmute myself, but I'll go back onto the screen here. Thank you very much, John. Everyone on the call, my name's Andrew. I work at Xero. I'm based in sunny Brisbane, even though it's raining pretty hard today. If you don't know Xero, it's a small business accounting platform. It's designed for small to medium businesses, just like pretty much everyone on the call today. Staying on the same topic we've had today of profitability and cash flow certainty, the aim of what I'm going to cover today is to run through some insights to how technology has evolved for the trades and construction business. And more specifically, I'm going to duck into two areas. I'll be looking at how AI is working inside the accounting space and also looking at the world of payments and how that's evolved. And the theme of today, you'll see, is constantly coming back. So we're trying to find ways for you to do the accounting work when you're not in the office. You can do it on site, or you can do it when you're traveling, rather than waiting to the end of the week or the month to actually get through your accounting work. So let's get into it to start off with. So I'm going to start off with artificial intelligence. Now, there is no shortage of hype around AI right now. It's actually not new technology. It's been around for a long time. I'll give some examples in a second. But in the last few years, there's been a real explosion of what's called generative AI. And when I say it's old technology, the best example I've got is Google Maps. Anyone who's used that in the phone, the good people at Google do not drive around the streets of Australia to find the roads. Instead, they look at where their mobile phones are going and they stitch together a whole series of different trips to find out how long it takes you to get from point A to point B. So again, that's been around for 10 to 15 years now. It's not new. What's been really interesting is the way it's evolved in the last couple of years. How Xero's using AI is upfront, and we're automating a lot of processes that are repetitive, time consuming, and I'll call it out, they're boring. Much like Lyndon, I am an accountant. Now, I don't mind going through bank reconciliation, BASs, GST, but you did not get in the business of trades or construction to do that. We're trying to find ways to make that easier and less painful. So the automation component, we're a fair way down that path at Xero. The next stage is to deliver insights to you about your business, to give you the right report at the right time. That's really difficult to do because there's so many different businesses that uses a platform like Xero. And the final stage, which I'm going to show you today, is to talk about we'll call it a conversational interface. And what we're talking about there is you can speak with Xero as if it's a real human. Rest assured, it is just an algorithm. It sounds like a human, and what it's trying to do is predict the next stage for your business and predict that next stage in a conversation. I'll give examples of what that looks like. So in terms of automation, some of the tedious stuff, here's some great examples here on the screen. We've got a help center at Xero called Xero Central. It's like Google for Xero if you're trying to find things. You can start searching for it inside there, and the AI will try to predict what you're looking for. So you can ask for the same thing about 50 different ways, and it's trying to find a way to give you what you're looking for. In the middle there, both John and Lyndon have talked about cash flow forecasting. Xero's got some pretty basic built-in cash flow forecasting, usually the 30 to 60 day mark. And that uses artificial intelligence to work out your own cash and how your business operates. Perhaps it's a more seasonal basis, but also similar businesses to yours. And the third stage there, we've got something called automatic bank reconciliation predictions. So if you've not used Xero, each morning it downloads the banking information or bank statements from the bank each morning. So it sees the daily transactions it goes through. And then what we can do now with artificial intelligence is try to predict what that cost relates to. For example, if something turns up in your bank statement that says BP or Shell, Xero knows with a very high probability it's probably got something to do with the motor vehicle expense. So it looks through your chart of accounts and tries to allocate that for you. That's moving on and getting more and more accurate. And we can sort of predict somewhere around about 95% of the transactions at the moment with a certain level of accuracy. But you still need your accountant and bookkeeper because it's not perfect. And there's usually some really specific examples in there where your accountant and bookkeeper does get involved to help out with that. So if you like, that's what we've got in place today. Let's talk about the cool stuff. So let's talk about generative AI. This is ChatGPT, sort of a whole series of new tools that have really exploded in the last couple of years. Xero has got a new program just this calendar year called JAX. You can see there's a JAX, which stands for Just Ask Xero. What we've tried to do is give you different ways to send questions into your accounting information. You can do it via email, text, you can use WhatsApp. I'm going to give examples of that in a second. And we want to get to a future stage where you can simply send a voice command. You can actually ask the words physically into the Xero app on your phone and it'll respond for you. Rather than talk about it, let's see what it looks like. So the example I have here is an electrician called Vault Valley Electrical. And what we're trying to do is do a quick analysis around some of the information, some of our debtors, if you like, inside Xero. I click on the top right-hand corner inside JAX and I get this drop-down box. And I'm going to ask it some simple questions. In this situation, I'd like to know how much money am I owed in my business? You type that into the message just at the bottom there in some real-world English. And then what JAX does, it goes back into the Xero file, it analyzes all your outstanding invoices, and it gives you a summary. It says you've got $10,000, just a little shy of $11,000 here, and it asks you, would you like to have a summary of the largest unpaid invoices? You simply say, yep, send me the summary. Xero then goes in, JAX goes into Xero, looks through, and here's the 3 largest invoices that are owed. And it looks at the largest one, which is a little over about $4,500. And it says, would you like me to review an email and send it off to the client, just to remind them they've got this outstanding invoice? But before you send that off, you actually want to say, just check, what was that overdue invoice for? Because you can't remember. What it does then, it looks at the overdue invoice and it finds out that this relates to a group called XYZ Corporation. The next questions are asking is, do you want to have a look at the payment history for this customer? All you then write back is, yes, please send me that because I want to know if this is a one-off issue or if it's a recurring issue. It then shows you a series of late payments for this customer. Not great news. We talk about the importance of cash flow. In this situation, Jax has asked, would you like to apply a late payment fee of $50 to this customer? XYZ. And you say yes, because we want to break the habit. So what it does is it goes into the invoice, it adds the $50 for you automatically, and it says, do you want me to draft an email to the client to send it out to them directly? And you say, do you know what? I'm pretty busy today. Yes, please go ahead and draft that email for me. It drafts an email with the attachment of the invoice, and it says, do you want me to send this out now? Most of the time, we've got some templates set up and you've been using Jax for a little while. You're comfortable with what it's going to send to the customer to remind them, and they're a rubbish payer anyway, so you're going to send out the reminder notice. So all you have to say to Jax to get this done is, yep, please send it now. So in this situation, Jax, or this generative AI, has given you some insights on your receivables that save some time and effort in updating an invoice and emailing the customer. Now that's great if you're in front of your laptop. What if you're on site? I talked about that before, you're traveling. So you can interact with Jax by using WhatsApp. WhatsApp's a super common messaging platform, on about 50 of them myself with school. So the situation here is you're walking out the door, the client says, I want 3 more power sockets added to my quote, please. So all you do in WhatsApp is you ask Jax to update the quote. Jax then confirms that quote's updated for the 3 extra sockets, and it says, do you want to send this to the customer? You simply write yes or a Y because you're in a rush and you're out the door. That means the quote's been updated and it's been resent to the customer, and you can continue on your day. So that's another way. WhatsApp's a really common platform, but what about plain old regular email, which has been around for a long time now? We can think of a situation here, which we'll just flick to email in a second. We're going to show you this on a phone, by the way. So assuming you're not doing emails on your computers, because most are on the phone. You send a client to a client query via email. They've confirmed they want to proceed. And then what you can do is you can forward the email trail to Jax, just saying create invoice. What it does, it looks at the information, the email plus the contact, and it goes ahead and has a crack at drafting an invoice for you, rather than you have to remember this at the end of the day. What Jax will do is it'll send you an email in reply, which we just see pop up on the screen here. Send you an email saying, here's my draft invoice. If you click on that email, it'll give you a link to the draft invoice. If you click on the link there, it goes through and here's your draft invoice inside Xero. So use the information in that email to have a go at drafting an invoice. It's not perfect. You can always make changes at this point here, but it's a lot easier than trying to do it at the end of the day. If you make some changes or if it's just right, you can click approve and email right there, and it's sent out to the client straight away. So it starts to reframe when you have downtime. Rather than waiting at the end of the day again, or the week or the month when you're doing this, you can do this, if you like, on the fly. And this is the future where we start to see artificial intelligence working for you as a business owner. It is worth pointing out that this is pretty new technology in terms of generative AI, this later stage. Anyone who's using Xero does have access to our beta phase of Jax right now. I sort of showed on the screen there. If you click on it, you'll have a drop-down box and be able to interact with it. We've seen a really great improvement in a really very, very short period of time. As in the last 4 months, we've seen the accuracy go through the roof. So likely this will become a fully compliant out of beta product in around the next 4 to 6 months. So it's moving very quickly, as modern technology tends to do. Moving on from AI, let's move to the world of cash flow, which has been a pretty hot topic today. And that's in keeping with today's theme. I want to talk about some options to make it easier for your clients to give you their money. That's the goal of what we're trying to cover today. And we do a lot of research in this area, and we see the impact, and both John and Lyndon have talked about it, the impact of late payments and unpaid invoices they have on small and medium businesses. But more specifically, it has a really, really big impact on trades and construction. Lyndon talked about some stats before. I can back up. We see those same stats, which is pretty tough in the world of small and medium businesses. But poor management of cash flow is still one of the top reasons for business failures. And it's worth pointing out that's not a new problem. There's different pressures today, but that problem's been around for a long time. So let's look at some options to get cash into your business more easily. Very, very straightforward option here is something called invoice reminders. If you hate chasing up clients for your unpaid invoices, there's an option inside Xero that says if you've not had a client pay you their invoice, Xero will automatically send an email reminder talking to the client saying, please pay your invoice. The default settings are on the screen there. You have 7 days overdue, 14 days, 21 days. You can edit each one of those emails to make it, if you like, more and more stern as you go further down the age receivables. You can also change the days. You can make it 10 days, 20 days. You can make it whatever you want to be. And there's a few options there. It's really straightforward and works well provided your bank reconciliation is up to date. So what happens on the other side? Say they haven't paid an invoice, it's been 7 days. Your clients will see a reminder that looks kind of like this. It looks like inside Xero. Talking to the client saying, please, just a quick reminder, you've not paid us again. Can you pay us? Now, the reason why I like the auto reminders is you do not have to remember to do this. It will do it for you. So if you get to the 14 and 21 days, they've had 3 reminders that they've not paid your invoices. We find this is a great way to get people to, just as a basic reminder, super straightforward to set up to get people to pay the invoices for you. But let's go a bit further. Think of other ways that you can actually get paid by customers. So we have teamed up with Go Cardless and Stripe, and these are called payment gateways. If you've ever bought anything online, there's about a 30–40% chance you've probably used Stripe in your life. It's a big global payments company. And we've got some cool features you can use if you have someone like a Stripe or Go Cardless attached to your Xero file. It takes about 15 to 20 minutes to go through the legal side of this to set it up, and there's links directly from the Xero file straight through to Stripe. So something I want to talk about up front is if you take payments up front at the time of the job, then there's an option called tap to pay. So what that means is if you have a Stripe account set up and you can use your mobile phone as a mobile point of sale terminal, you don't need any extra hardware. I'll explain what that looks like in the next screen. So if you like the screens here, the workflow goes from left to right. Say you're a client on the first screen and you've done the job, you can create an invoice on the spot. So simply click go to invoices, create the invoice, which is the second screen on the left. Once you've done that, you have an option once you have the payment gateway set up to say take payment. Then you get to the next screen asking you if you want to activate at the bottom there, tap to pay on iPhone. Once you do that, the screen changes and it will go a bit dark and allows the client to wave their credit card or their phone or a wearable device onto their mobile phone to allow payment on the spot. You see the final screen there which says send receipt. And the way that phones do that, if you think of your Apple or Android phones, pretty modern phones last sort of probably 6 to 8 years, have a very small chip inside it called an NFC chip or a near field communication chip, which allows this to take place. Previously, this was really hard to set up, but now the modern tech makes it really easy to make this work for you. But we know not everyone here takes payments up front. There's a whole bunch of different situations inside trades and construction. For example, progress payments on large projects, or for example, the job needs to be certified before you can take payment. It's a stack of different scenarios where the tap to pay is not appropriate for your business. So payment gateways can also work with Xero invoices. Here's an example where we're sending an invoice out to our customer. Our customer is Chelsea on the other side. And in this situation, I have online payments are being activated for this customer. And I can toggle this on and off. It doesn't always need to be on, so I don't need to send it to everyone this way. In this situation, the invoice is $330. We're ready to go, and I'm going to push approve and email to the customer. The customer in this situation, being Chelsea, will see this. She'll get an email that looks like this. This is an example through Gmail from a Reddy's business paying $330. All Chelsea needs to do to pay here is click on the review and pay, and this next screen will appear. We'll have the invoice on the left-hand side, the basic information. You can look at more information underneath that. You can download the invoice. But on the right-hand side there, I can enter my credit card details. If I've had a credit card before, and this is a progress payment as an example, Stripe will remember those credit card details, so we don't need to re-enter that. She simply clicks pay on the right-hand side there, and it moves through the final screen to confirm payment for Chelsea. Now, I think Lyndon talked before about he's getting a fence fixed. I've recently had some plumbing done. I should point out in my house, as a customer, I love this because I don't have to remember to go through to my internet banking at the end of the week to enter in the BSB and account number and then check it 45 times to make sure I'm not paying to the wrong account. I can also do this from my mobile phone. So it's easier for me as a customer to get paid. And think about how easy you're making the transition for your own customers to take their cash off them. Another cool feature, if you've got payment gateways set up, and this is probably the last one just for today, is SMS invoicing. This is a really recent feature. So a lot of people say, I've sent invoices, I'm not getting through, the customers don't read my emails. just some interesting stats. So when we send emails out from Xero, some marketing emails, as an example, we look at the open rates, and the open rates are usually between 4 to 10%, which apparently is pretty good. I think that sounds rubbish, but apparently that's not bad. When you send through a text, the text open rates are closer to 95%. So people do open texts. So if someone says, I've not seen your invoice, you can see in this screen here on the top left-hand corner, it's still awaiting payment. You go, no problem. On the right-hand side there, you see add payment. There's 3 little dots. If I click on those, an option turns up to send SMS. If I click on that, I can put in someone's email, I can put in someone's phone number, put in their details, I push send. Then on the other side of it, the customer will receive this. The first screen there says, hi Tess, to view your invoice of $20, please click on this link. When Tess clicks on that link, she sees a payment gateway on the right-hand side. Again, making it easier for your customers to take payment, to give you their money. So hopefully it's been a bit useful. You've seen a few different options to try to get cash in the door. If you want to know more about this, speak to your accountant. But if your accountant's not familiar with this or not giving you the answers you want, then give Lyndon a call. Lyndon's been dealing with Xero and these sort of problems for a long time, and he can help you work through this process. Thanks very much, and back to you, John.
Wow. Jam-packed, fast-paced, with so much value in that. Thanks, Andrew. And for those of you who weren't aware of some of those features and abilities that Xero have, I don't think, as I said, the first slide I had, in the age of information, ignorance is a choice. So there's, between Lyndon, myself and Andrew, there's plenty of ways we can support you in getting, cash flow into your bank, staying profitable and getting the right support. And I guess that's really what I'd love to sort of conclude with today is, your financial team. It's so important these days to know what your strengths are and have the right people around you. And there's a big difference between understanding the numbers and doing the numbers. You know what you're really great at in your business, and it's about having other people around you to help you with the doing. So with your financial team, set up some expectations and making sure your bookkeeper keeps your numbers current, accurate, and your reports and your lodgements are on time. With your accountant, make sure that they're here to help you with reporting structures, budgets, forecasts, pricing, cash flow, helping you get financially well organized and definitely prepared as well. So one of the things that I say at ProTrade United is you can shift and change anything in your business within 90 days. If you have some challenges with your pricing and your cash flow and your profitability in the next 90 days, there's an opportunity to really shift that. It's simple, but it's not necessarily easy. And that's really the gig. Money management isn't complex. It takes a little bit to understand, not necessarily easy, but it's like learning a language. And if you're up for learning the language of your numbers and learning the financials, then I think you've got a great opportunity to get things in shape. And part of what we wanted to do today was ensure that for those of you who would love the opportunity to have a catch up with myself, Lyndon, or the team and get some guidance there, one of the things that we wanted to assist you with, if you'd love a personalized catch up with ProTrade United for a performance session, which is something that has a look at where you are now, where you'd like to be, and the opportunity to get some quick wins and put some steps in place, that could be the key. An accounting review with Next Level, tick that as well. We also have a great opportunity to support you and your team with a leadership program at ProTrade United, which might be something to assist you in stepping back and getting some guidance and support. Particularly, I know we've got quite a number of our clients on the call, and if that's something you'd like a little bit of support with, please feel free to tick that little box as well. And if it's neither, that's quite okay. And if you're unsure and like a little bit more information, then please do that as well. But as we wrap up, Lyndon, any final comments, support for the guys?
Yeah, look, I think fantastic presentation. I just jam-packed full of actionable steps and new technology and things that you can do. So don't sit on your hands. Take action. Make a difference. Your business is the only business in the world that can give you the lifestyle that you want. So invest in your business and make it happen.
Yeah, fantastic. Andrew, for yourself, any final
No,
wrap-ups?
it's when we talk about the challenges you see here, it's not unique to the trades and construction industry. We see similar sort of issues across a whole bunch of industries. And I work with accountants and bookkeepers a lot of the time. The only thing I've seen work really well as from a consistent change is to try to make a small change in your business every 90 days. Much easier said than done, because I'm calling that from the cheap seats over here because it's not my business. But if you can make one change every 90 days, you've got an unrecognizable business in about 2 or 3 years. But it's hard to keep it up in the long term. It's a real challenge.
Yeah, great comment. And listen, just by being on this session or registering for this session, you'll get a recording. And if you do want to review it again or share it with your team, there's the opportunity to do that. But know that just by wanting to understand more around your profitability, cash flow, and the technology available to you, you're in one of the small percentage of people who are up for shifting and changing. So well done on all of that. Lyndon, great to work with you again. Andrew, great to have you on the session and bringing your expertise. It's exciting what's happening in the world of navigating business. I really believe we're living in one of the most exciting times to be alive. Technology is there to make our life easier, simpler, and support us. We've just got to embrace a little bit of change along the way, which isn't necessarily easy. So thank you, Linda. Thank you, Andrew. Thank you, everybody, for being on this session. All the very best for the run into the end of 2025. And I trust it's setting you up for an amazing 2026. Take care, and we'll see you soon.
Thanks, John. Thanks, Andrew. Thanks, guys.
Thanks.
Bye.
Thanks.
Bye.